Welcome back. In this video, we are going to introduce the stock screener. And if you happen to stumble across this video, and it's actually, I think it's the third in the series, so you might want to go back, just find the channel where you found this video, go to videos, sort from oldest to newest, and just start watching from whatever point you want to. We need a way of picking stocks. Another way of saying that is we want to screen for stocks. This is one stock screener that you can use, finviz.com, and you would want to go here to screener. How this works is that you make certain selections here at the top that filter the list of stocks matching your selections. And from there, then you can start analyzing the stocks. If you watch other videos, a lot of them tell you, pick a market cap. Now remember, we are going to concentrate on penny stocks because even though they're high risk, they also could be high reward, but also because you can start with very little money. And so to pick a penny stock, then you'll want to, let's move this so we can look at it. You'll want to pick small, under 2 billion, pretty much is considered a penny stock. Now I'm going to do this, but then later on I can show you because of other filters, we actually don't even need to pick the market cap. What is market cap? Market cap or market capitalization is talking about the total value of a company's shares. It's an indication of the value of the company. It's calculated by multiplying the price of one stock by its total number of outstanding shares. And we won't get into what outstanding shares is at the moment. But that's a very basic introduction into market cap. So before we pick market cap, right now meaning there's no filter, so everything shows up from mega to micro. And if we scroll down, we see that there's like 400 something pages. So let's go ahead and pick market cap of small, which is under 2 billion. And that updates, and now we're down to like 206 pages. For our next filter, we need to talk about volume and why we don't really care at the moment for average volume, but we care about relative volume. But first, we have to talk about what is volume. What is stock trading volume? Volume is simply the number of shares traded of a particular stock over a period of time, typically a trading day. So that means that at the start of the trading day, the volume is 0. And then what happens is buyers and sellers are exchanging, they're creating transactions, they're exchanging stocks. The seller sells stocks to the buyer. That's the number of shares that exchanged from seller to buyer is added to the volume count. And so over the day, the trading day, then the volume number increases to the end of the day, and then it is said that that day there was X amount of volume. Let's take a look at something real. For instance, let's do Apple, which I happen to know the symbol. There it is, Apple stock, and a place to view it. There's many ways to do that. For example, I could even click on here. I like Market Watch, so let's go there. Apple stock, there it is, Market Watch, let's go there. What we're seeing here is the day, the trading day from here to here, and then this part is called after hours. Let's not talk about that right now. So this is the price of the stock of a single share stock at a given moment in the trading day. The total number of shares that traded hands for that day is the volume, and that is right here. So volume was 122.85 million shares trading hands for the Apple stock for this day of whatever day that is. If you wanted to look at just volume, you can click here, and it shows you that, for instance, at the start of the day, there was a spike in trading, and then volume goes down, but now it's accumulating, right? But the minute by minute, period by period time of the day, the actual number of shares trading hands, which is the volume for that moment, went down. This is like the lunchtime area, not much was happening, and then near the end of the day, again, another spike. Average volume is you take the volume of day 1 plus the volume of day 2 plus the volume of day 3, for instance, divided by 3, and that's the average volume per day for 3 days. And so this indicator right here is saying that the average is 92 million. That's the average volume over what period? Over 65 days. So that is average volume. We aren't really interested right now in average volume because it's a static number. For example, over the period of time that you're looking at things, because you want to know how the stock is moving, trending, average volume is, like I said, it's a single number. It doesn't tell you that, say if it's over a period of a week, it doesn't tell you that at the beginning of the week it was trading higher and then at the end of the week it's trading lower, or vice versa. It doesn't tell you that. It's just an average. It doesn't tell you there was a spike somewhere in the middle. What we want to look at is relative volume. What is relative volume? Relative volume tells us how many shares have traded, like for the day currently, in relation to how many shares are usually traded. Another way of saying that is it's a ratio of current volume divided by average volume, and that does give you a trend. Relative volume equals current volume divided by average volume. The volume is equal to current volume divided by average volume. So it is a decimal. So let's say that my RV is 1. That means that my current volume divided by my average volume is equal to 1. It also means my current volume is the same as my average volume. So that tells me that the volume is not increasing in the current day over the average of the last periods, the 3 months or whatever it is. Whereas if excuse me, the relative volume is 1.5, it tells me that the current volume today's is trending up a little higher than the average volume. If it's 2, it's telling me the current volume is twice what has been the average volume, and so on. So it does give you a trend. So you can play with this here. And so we want volume to be increasing, because remember, we're trying to pick stocks. And increasing volume means increasing interest in the stock. But is it positive interest or negative interest? So let's talk about increasing volume. Let's say that volume is increasing. So over time, say that volume is increasing. Now, is that a good thing or a bad thing? Well, I don't know. Depends. Is the price increasing as well? Or is volume increasing, but price is decreasing? Okay, so there could be increased interest in the stock, and the price is going up. People are interested in buying, and therefore they're willing to pay sellers are asking, and that, you know, causes the price to go up, or people are scared and they're dumping and the price is going down. Now, obviously, when you're selling and dumping, there has to be someone to buy your shares. But it could be that there are people who do believe still in the stock, even though it's going down at the moment. It could be the actual pump and dumpers. We'll talk about pump and dumping later, but they caused the original increase or spike, and they're going to buy it on, you know, at the low again, and probably try to do it again. It could be market manipulation. So anyway, the point of that I'm trying to make at the moment is increasing volume. You also have to take a look at what's happening with price. So we are going to play with this. Let's start at 1.5, let it update. So now the pages went down to 43. That's what it says right here. We're going to end this video right here because it's just getting kind of long, and we have still yet to pick one last selection, which is the actual, I believe, the actual price of the stock. So we'll continue in the next video.